Hello, my name is Dave Weipert, Home Loan Advisor with Golden One Credit Union, and I want to thank you for watching this program. And also my partner in crime, Brian Wendt, Home Loan Advisor with Golden One. We're both very seasoned. I've been in the business for going on 30 years now. Um, God, saying it out loud is kind of surprising. It's hard to believe it's been that long. But I started in 1988. I started as a processor. Worked for my father, and he was a broker at the time, and got my license, and have been originating ever since. Brian is just a couple years behind me. So between the two of us, we're just shy of 60 years experience. So that's one thing about Golden One is they hire seasoned loan officers, and that's very important. So my goal here in this presentation is to talk a little bit about the Golden One background, just give you kind of an idea of what credit union is and how it differs from a bank, and what kind of benefits your borrower that will become a member of the credit union once they do a loan with us, what kind of benefits they can expect. And then we'll go right into the home loans. So let's get started. So who is Golden One? Well, we were founded in 1933. We were founded by California state employees. I believe we started with about 5 employees, and over the years we've grown to be the second largest credit union in the state of California, the 6th largest in the nation, which is impressive given that we only do business in California. And we are a not-for-profit organization that proudly serves the community. Now, keep in mind that not-for-profit is not the same as a nonprofit organization. We do have earnings, we do have profit, but it's not focused on that. Our focus is to serve our members, and earnings are invested back into products and services to help our members. And I'll explain that a little bit more as we move forward. Our mission, values, we deliver financial solutions with value, convenience, and exceptional service. If you read through these, you'll see a common theme, and that common theme is excellence in service. So, and I will tell you that with every home loan that we close, we send that member a customer service survey, and on a scale of 1 to 10, we strive to keep an average rating of 9. And I'm proud to say that to this day we do. We have an average rating of 9. So that says a lot about our customer service. Okay, so let's talk about the differences between a credit union versus a bank. And I really kind of summarized it down to 3 bullet points. The first one, and I mentioned this before, is that we are not for profit. So we're not focused on profit. A bank is for profit. Credit union is owned by its members, so it's made up of members that can do business with the credit union. A bank is owned by shareholders, and also with the credit union, the board members are volunteers, with the exception of the CEO, of course. And a bank board members are paid. So what does this all mean? Well, it means we reinvest our profit for member benefit. So those, even though based on the fact that we're not for profit, the earnings are focused towards using those earnings towards lower rates and fees, higher dividends for the members, absolutely more convenient ATM and branch locations, and we got plenty of those. And lastly, I wanted to mention that in December of 2014, we actually gave back our earnings to our members, quite literally, in the form of deposits in their savings accounts. That was a nice Christmas bonus for sure. This slide just shows a kind of a snippet from the Sacramento Bee article written on December 8th of 2014. in response to that $18 million give back, basically stating that officials of the California Credit Union League said it could be the largest give back ever by a credit union, not only in California, but quite possibly the country. So it was an amazing thing, and I'm quite proud to be associated with a credit union like Golden One that does stuff like this. We offer personal branch banking. So right now our membership uh, is up to 830. Actually, it's probably closer to 850,000 right now, and we have more than 82 branches statewide. And the suites of service offered are, very common: mobile services, online services. But we also, as a credit union, we're most known for our free checking and savings, and also that we co-op services with over 500,000 branches. So although we have 82 Golden One branches, we also co-op with other well-known credit unions, such as in our area, such as Commonwealth, AmeriWest, Alliance, Premier One, Patelco. These are all credit unions you could walk into, make deposits into your Golden One account or withdrawals. So that's a nice advantage. That's something banks can't offer. And also our ATM coverage that extends us over 30,000 ATMs, and that's free ATMs nationwide. Other member advantages are discounts that we offer to theme parks such as Great America, Knott's Berry Farm, Universal Studios, and as you can see, there's quite a few on the list here. Also, amusement parks, Six Flags, the Boardwalk. I was born in Santa Cruz, so I have an affinity for the Boardwalk. I have a love for the Boardwalk. Educational, Monterey Bay Aquarium, and other member discounts such as DirecTV, and one that might be of interest to your customers, ADT, Home Security. And lastly, the Golden One Center was opened in September of last year, home of the Sacramento Kings basketball team. So if you're a basketball fan or your member's a basketball fan, they can enjoy 10 to 50% off on tickets to games. Okay, next comes the star of the show, home loans. Home loans is the division that Brian and I represent, and this is the meat and potatoes of our presentation, so let's go with it. Okay, we are Fannie Mae Direct, which means we sell directly to Fannie Mae on the loans that we don't keep in-house in portfolio. And there are circumstances where it merits that, so we have that option. And also, we virtually have no overlays. And for those of you that don't know what an overlay is, an underwriting overlay is a situation where a lender has decided to tighten up a guideline that's stricter than what the Fannie Mae guideline is. So, for example, Fannie Mae might approve a borrower that has a 49% debt to income ratio, while that lender is limited to 43 or 45%. They won't go beyond that, regardless if Fannie Mae's desktop underwriter, which is their automated underwriting system, approved it or not. We don't have that situation. The only overlay that I can think of that we have right now is that we do always require 2-year tax returns for a borrower that owns other investment property or is self-employed or has mostly commissioned income, that sort of thing. So sometimes Fannie Mae will only ask for 1 year tax returns, but in those cases we still need 2. So not a deal breaker, but it's just something to mention. Our lender fees are very low, $850. That includes both our underwriting and processing fees, and that's being a credit union that gives us the opportunity to offer lower rates. We offer our own HELOC, home equity line of credit, seconds and fixed rate seconds. And with that, that means we can offer our own 80-10-10 program or piggyback program. So 10% down, and this helps alleviate the need for mortgage insurance. Portfolio lending. We are a portfolio lender. So 95% of what we do is portfolio. We're not going to offer higher rates because of it. It's just something we do. It's how we're structured. And under that blanket, we offer second chance loans, and I'll explain that in the next slide. Low down payment options, and flexible guidelines. Okay, let's talk about those second chance loans. So this is really, really cool, guys. This is going to save deals for you. We also call it the 223. Why do we call it the 223? Well, let me explain. If a borrower has a major derogatory event, such as a foreclosure or bankruptcy, Fannie Mae guidelines dictate that there is a needed waiting period that's required before they'll be eligible for a home loan again. And our waiting periods are way reduced in comparison. So let's talk about that. So for a short sale or deed in lieu, we only require a 2-year wait period versus the normal 4-year required through Fannie Mae. Bankruptcy, also 2 years, as opposed to the 4 years needed through Fannie Mae. So this is half the time, folks. And lastly, a foreclosure, only 3 years versus a 7-year required waiting period through Fannie Mae, which is really, most industry standard guidelines. Most lenders can be following those guidelines. Now, you will find some lenders that will do even a day out of a foreclosure or bankruptcy, but you're going to be paying the rates. They're going to put a huge down payment down, probably 35-40%. Usually, this is we're almost talking subprime here. I know of a company that can do it a day after. They don't have any waiting period, but then you're looking at maybe 7, 8, even 9% on a 5/1 arm. So it's not even the same ballpark, guys. What we offer here is vanilla pricing, 30-year fixed. There is no hit. They're not being penalized on rate or fee for this. So this is outstanding. What we do need, though, for them to qualify for these shorter waiting periods is for the property to be owner occupied or a second home. So we will not allow this on investment properties. It must be a purchase or a no cash out refi. So we're good to go here on purchases. And max 80%, or in other words, at least 20% down to make this happen. If they don't fit those guidelines, then they have to just go. It just reverts back to the industry standard at 4 years for short sale, bankruptcy, and 7 for foreclosure. And it must be an isolated event. We're more than willing to offer a second chance to borrowers, but they must show that they are, over the years, have been actual good credit users. Somebody that hasn't shown a pattern of misusing credit. So if you came to me and said, I got a guy that had a short sale 2 years ago and a bankruptcy 3 years ago, that's probably not going to work because we have 2 major events side by side. Okay, on to the next slide. We offer low down payment programs. And hold on to your hats, folks. This is a new product we just rolled out. 97% up to $850,000. It's a 3% down program, jumbo. So to put that in perspective, we're looking at, for an $876,000 purchase, they would only have to put a little over $26,000 down. I mean, that's amazing. So start looking at dusting off some old files, because you might find somebody that needs this program. Also, on our 80-10-10 piggyback, we can offer that up to a combined loan amount of $1.5 million. So that's as far as I know, that's larger than most. And here's the breakdown as far as credit score is concerned. So first of all, in an 80-10-10, very hard to find an 80-10-10 out there that's below a 700 credit score, and we can actually go down to 680. So again, we can save some deals here. This would limit us to a aggregate loan amount of 850. 700 minimum score will bring us up to $1 million, and then finally at 720, that qualifies us for up to $1.5 million. Okay, we also offer flexible guidelines under our portfolio lending. So this is where we really see the power of portfolio. Okay, guys, this is huge. Only 2 months reserves required on all of our jumbo products. So, compare this to, what's out there. We see on the low end usually 6 months, all the way up to 12, sometimes even 24 months reserve requirements. So this is really, really aggressive. 45% DTI, which normally you'll see Steadfast at 43% under the QM guidelines for a jumbo. So we're 2% above that, which you might not sound a lot, but it can make or break a deal. And in addition to that, we can do exceptions on a case-by-case basis, upwards to 50%. Really depends on their the amount of disposable income they might have, how much they're putting down, how much reserves they have. So the total overall risk factors involved. So another huge point here: 680 minimum score. For the best pricing out there, you're really looking at. Obviously we're going to be priced based on credit score. So we still offer great pricing at 680, but most lenders out there won't even offer anything below 7 on a jumbo, 700. So we're 20 points below that. That's fantastic. That's going to open up some doors for some folks. And very important to mention that on our 80-10-10 deals, the second, so the HELOC that we would put behind that first, the guideline just automatically mirrors the guidelines on the first. So we're not going to have a problem with, okay, they qualify for the first mortgage, but bummer, they don't qualify for the second, so that kills our deal. That doesn't happen with us. So this is also part of the power of portfolio in regards to Golden One. Also, we can get really creative with our piggy bank. We can utilize a high balance Fannie Mae first mortgage, and then combine that with our HELOC to give you a true jumbo loan amount up to 80%. We can do this at a 640 score. So that's unbelievable. So put that in perspective. On a $1.4 million purchase, we would be able to loan $1.12 million. That's an 80% loan to value. So that's fantastic. And then, of course, we also offer foreign national lending. And at this point, I'd like to thank you for taking the time to listening to me talk and talk about our products, talk about our company, and hopefully I've given you some information that you can benefit from, maybe your clients can benefit from. If you have any questions, please don't hesitate to call me at 408-320-7621. And there is my email address, dweibert@goldenone.com, or Brian Wendt at 408-221-4412 at bwendt@goldenone.com. Thank you again, and have a great day.